Welcome to Living in Grand Rapids, the podcast. I am Josh May.
I am Katie Arnold.
I am Leah Hills.
And I'm Ross Bacon.
And we are four of the May Group Realtors with Remax of Grand Rapids coming to you today. Another episode of Living in Grand Rapids. We're going to talk real estate. We've been talking community. We've been talking events. Obviously, we are in the real estate business and we want to provide some information in terms of things you need to know about real estate. And, I'd like Katie, Leah, what are we going to chat about today?
Yeah, well, we thought we would talk today about kind of some expectations for buyers who are maybe planning to buy a home, whether it be their first or whether it be their second, third, fourth, beyond. But like, how much should they have for a down payment? What are those like expectations from making sure that once they get, and obviously like there's conversations with lenders and stuff that would happen here, but just, kind of that like base level knowledge that you would want to make sure you provide to your buyer, your client, as they're like starting to go through this process and making sure that they're ready for it.
I like it.
Yeah.
I think it's great. And I think there's a number of ways we can take this conversation. So we're going to do our best to kind of explain it from different angles. Everybody might be in a different situation. You could have a first-time home buyer. You can have a second-time home buyer. You can have a 10th-time home buyer. Everybody's financials are a little bit different, but let's take the buyer that's got plenty of money for a down payment, right? Like they got plenty of money. What should they do, Ross?
I think the rule of thumb is the 20%. 20% is going to get you in a little bit over that hump. A lot of lenders would like to see the 20% being brought to the table. You're going to get the best rate and terms when you're putting down the 20% or higher. But of course, not everybody has that kind of cash just laying around. But we're only talking about people who are just sitting on an abundance of cash. And everybody has a different financial situation, whether you're sitting on a bunch of cash or not. It really comes down to, your comfortability, the conversation you have with that lender, and what makes most sense for you. Right. But, anything under the 20%, there's always, each lender has their own different sets of, fine tweaking the loans and finding out, the rates might change a little bit. So it's really just having that conversation with your realtor or your lender and finding out what's the best fit, right?
Yeah. And I think the biggest thing, one of the biggest reasons why people want to get to that 20% is to avoid something called PMI, which is private mortgage insurance. So your mortgage companies will charge a premium in most cases. And again, we are not lenders, Ross. Okay. Katie, Leah, we're not lenders. So I appreciate you throwing that disclosure out there, Katie. Yeah. So anything less than 20% in most cases, buyers will be charged a little bit of a premium. So they do a 5% down program. They're going to be charged a little bit extra every single month for private mortgage insurance, which just protects the lending institution. Once a buyer gets to a point where maybe they've been in their house for a couple of years, they can remove that private mortgage insurance once they get 20% equity in their home. So as far as rule of thumb, in order to avoid it, and I think that's more of the conversation, the down payment piece, in order to avoid any additional cost, if you've got the money and you're comfortable, we do feel that it would be wise to do a minimum of 20% down. Right, Ross? Yep. I think you and I can both agree with that.
I would. And, that's a phone call that we get quite a bit. Well, I do. Past clients calling and asking me to do a market analysis on their home. They want to see if they're at that 20% equity in the home so they can call their lender, have the appraisal ordered, and get the PMI removed. I think that is something that you want to keep your eye on. If you keep hearing that your area or your house just keeps appreciating in value over the years, always remember if you're paying PMI that it can be removed. So it's always good to keep up to date with what's going on in your neighborhood with your house. And speaking to your local realtor to find out if that's something that you might be able to have removed.
So let's talk about another section of the buying demographic here. And, this was me. This was me when I bought my first home, and it's a lot of people, which there's absolutely nothing wrong with a low down payment. It's very common. you've got to think about, whether it's a first time home buyer or somebody that just wants to enter the market, and maybe they've got 5% down. Maybe they've got 10% down. What we've seen over the past 12 years, it would be a shame if somebody waited until they had that 20% down, if they could have bought, a couple years ago at 5% down, right? So
Yeah.
maybe somebody only has 5% down. We're definitely going to advise you to still enter the market, just because the way that real estate appreciates, you want to get in, you want to build equity. And in most cases, at the end of the day, the most financial interest that one has is in their home. So if you can get in at a low down payment, and there's plenty of loan programs out there, whether it's a FHA loan program, which the minimum down payment on that is 3.5%. You've got some lenders under certain programs are allowing 0% down. Now, this 0% down was actually common 10, 15 years ago, but things tightened up during the recession. At the end of the day, I would not let my down payment prevent me from entering the market. So we see plenty of 5% down, 10% down, 3.5% down. Right, Ross?
Yeah, and this is something this is what we do. This is part of our job too, is having that conversation with buyers. I think a lot of buyers, hear about the 20% and think that potentially obtaining a home without it is difficult. We have this conversation all the time. And we have the great relationships with a lot of local lenders here in the Grand Rapids area. And we always try to set people up with the best program for them. But yeah, absolutely. I mean, anybody who bought 3-4 years ago with the 5% down is doing fantastic. I have a client right now. We have a closing coming up here in the week, and hasn't even been living there for 2 years, and she's going to be coming out amazing. She's so happy with the way that it is, and it set her up to be able to go back to school and do the things she wants to do, all because she bought that home a couple of years ago.
Yeah, so we're what we've seen over the past decade, people have been absolutely pleased with whatever down payment they put down. Whoever has entered the market, they are pleased with their return, and they're happy that they just got in. So don't let the down payment, scare you or push you to not do things. In my opinion, because we look at this as a long-term investment, and over the years, over the decades, over the century, real estate has proven to have a steady appreciation over the long haul. Now, Katie and Leah, I believe you also mentioned, or you maybe were going to mention, what can buyers expect as far as some additional fees? Was that right?
Yes. Yeah. Yeah. Like the other costs, and I think as someone who sees the settlement statements that come in for our buyers, that's kind of where there's extra costs on there that maybe they wouldn't think of initially,
right,
that come with those closing costs.
Yeah, this is a really good conversation because, let's face it, especially for a first-time home buyer, if they have never bought a home before, some people are expecting that, hey, I've got enough money saved for the down payment. This is perfect. I've saved up, I've got 5% down. I want to enter the market. Well, we often explain that on top of your 5% down, you are going to have some additional fees, what we call your closing costs and your prepaid expenses. So that can vary depending on the loan size, but let's just say, for example, if you buy a $300,000 house, you could expect your closing costs and prepaid expenses to be anywhere between, $4,000 to $6,000, maybe $4,500 to $7,000, depending on what your interest rate and things of that nature. So to dive a little bit deeper into those fees, you've got a couple different areas. So obviously, you've got your bank who is giving you the loan. So there's going to be some mortgage related fees, right? There's going to be some bank origination fees. There's also going to be some appraisal fees. The title insurance is involved when you buy a property, just to make sure you're protected. So you're going to pay some title insurance premiums. In addition to that, you've got, you want to keep your home insured. So you've got homeowners insurance. And then in addition to that, you've got your closing fee, where you'd sign the documents, and also some property tax, proration. So if you're a lender, you're building these property tax escrow accounts where your lender can then make those payments for you. So that's the majority of the fees, but buyers need to understand that in addition to their down payment, there's always going to be closing costs and prepaids. And if you're communicating at a great level with a realtor or a lender, they'll be able to walk you through that in detail. So there's no surprises. Got anything to add to that, Ross?
Inspections, I mean, these are just, it's not going to be part of your closing costs, but it is upfront fees that kind of come along with purchasing a home. So typically that is something that you pay up front. And if there is something that you don't like about the home or something happens where it falls apart, I mean, you're out the money of the cost of the inspection, but that's typically going to be between $300 and $400 anyways.
Well, I really like this conversation. We've been having this conversation for decades. Ross, you've been in the business for almost a decade.
Almost.
And
it's strange.
I've been in the business for 2 decades. So between Leah and Katie and Ross and I, believe it or not, you've got 35 years of experience here, guys. Give it up. Anyway, just giving you a hard time, but this is a really good conversation for anybody that's listening. I feel like this was very informative. So if you're a buyer and you've listened to this, we would love the opportunity to have another conversation with you, facilitate a conversation with a lender, and really make sure that this is a nice, smooth process for you. That's definitely what we are all about. And after you've had the conversation with us, we will let you get back to living in Grand Rapids. Have a great day.
Thanks for listening to Living in Grand Rapids, the podcast. Please take a moment to rate, review, and subscribe to this podcast and share with your friends. You can find us on Instagram at MayGroupGR or online at marketgrandrapids.com.